Welcome to AltFinance, the funding frontier, where we demystify the complex world of alternative financing and empower you with the insights you need to thrive in today's economic landscape. I'm your host, Jason Feimster, founder and CEO of Moonshine Capital, and today we're diving deep into the heart of commercial real estate, focusing on a topic that's crucial for investors, developers, and anyone interested in the burgeoning field of real estate ventures, navigating CRE Loan Strategies. Commercial real estate, or CRE, financing is a cornerstone of the real estate investment and development world. It's where dreams of erecting skyscrapers, launching retail havens, and creating residential complexes turn into tangible reality. However, the path to securing the right financing for these projects is often fraught with complexity, requiring a nuanced understanding of the various loan options available, how they work, and which is best suited for your specific project. In today's episode, we're going to peel back the layers of CRE loans, offering you a comprehensive guide to the types of loans available, from traditional bank loans to more innovative financing options like bridge loans and private lending. We'll explore the current landscape of CRE financing, delving into how market trends, economic factors, and even global events influence loan availability, terms, and rates. But understanding your options is just the first step. We'll also discuss strategic approaches to securing CRE financing, including how to make your project more appealing to lenders and tips for negotiating better terms. Plus, we'll highlight real-life success stories, sharing insights from those who successfully navigated the CRE loan process to bring their perspectives to life. And because the world of CRE financing is ever evolving, we'll also cast a glance toward the future, exploring upcoming innovations in financing and how you can stay ahead of the curve. Whether you're a seasoned investor, a developer looking to launch your next big project, or simply curious about the dynamics of commercial real estate financing, today's episode is packed with valuable information designed to enlighten, inspire, and empower. So let's get started and unlock the secrets to navigating CRE loan strategies, ensuring your next real estate venture is not just a vision, but a successful reality. Understanding CRE loans. In the realm of commercial real estate, securing the right financing is akin to laying the foundation for a skyscraper. It's an essential first step that determines the stability and success of the entire project. Today, we're starting our deep dive into the world of commercial real estate, or CRE loans, with a critical tool for investors and developers aiming to bring their real estate visions to life. What are CRE loans? At its core, a CRE loan is financing used to purchase, renovate, or refinance commercial properties. Unlike residential loans, which are typically used to individuals, CRE loans are granted to business entities. These can range from office buildings, shopping centers, and hotels to warehouses and multifamily residential buildings, considered commercial properties due to their use in generating income. Types of CRE loans. Understanding the landscape of CRE financing begins with familiarizing yourself with the various types of loans available. Each type caters to different needs, project stages, and risk profiles. Here's a brief overview. Traditional bank loans. Offered by banks and similar lending institutions, these loans are often the first option many consider. They come with competitive interest rates, but require a strong credit history, significant down payments, and often personal guarantees. CMBS loans, commercial mortgage-backed securities. These loans are secured by mortgages on commercial properties and then packaged and sold to investors. They offer fixed interest rates and are non-recourse, meaning the property itself serves as the only collateral. SBA loans. The Small Business Administration offers programs like the 504 and the 7A that are suitable for small business owners looking to purchase or renovate commercial properties. These loans are known for their favorable terms and lower down payment requirements. Private loans. These come from non-bank institutions or individual investors and can be more flexible in terms of requirements and quicker to fund. However, they usually carry higher interest rates. Bridge loans. Short-term loans used to bridge the gap between immediate financing needs and long-term solutions. They're particularly useful for renovations or when quick financing is crucial to secure a property. Key factors to consider. When choosing a CRE loan, it's essential to consider several key factors beyond just the interest rate. These include loan to value or LTV ratio. This is the amount of the loan compared to the value of the property. Lower LTV ratios often qualify for better loan terms. Debt service conversion ratio or DSCR. Lenders use this to assess a property's ability to generate enough income to cover the loan payments. A higher DSCR can improve your loan eligibility. Amortization period. The length of time over which the loan will be repaid can affect your cash flow and total interest paid over the life of the loan. Prepayment penalties. Some loans impose penalties for early repayment, which can affect your flexibility and financial planning. Choosing the right CRE loan involves balancing these factors with your project's needs, your financial situation, and your long-term goals. It requires careful consideration and often expert advice to navigate successfully. In this segment, we've laid the groundwork for understanding the vast landscape of CRE loans. Armed with this knowledge, you're better prepared to explore the nuances of each loan type and how they can serve your specific real estate projects. Next, we'll delve into the current market trends influencing CRE loans, providing you with the insights needed to make informed decisions in a changing economic environment. Market trends influencing CRE loans. As we venture deeper into the world of commercial real estate financing, it becomes apparent that the landscape is not static. It's shaped by a multitude of factors, economic, regulatory, and market specific, that can significantly influence the availability, terms, and appeal of CRE loans. Today, we're going to explore some of the key market trends that are currently influencing CRE loans and what they mean for investors and developers. Economic factors and interest rates. One of the most pivotal economic indicators affecting CRE loans is interest rates. Set by the Federal Reserve in the United States, these rates impact the cost of borrowing across the board. When interest rates are low, borrowing is cheaper, making it a more attractive time for investors to seek financing for new projects or refinance existing loans. Conversely, when rates rise, the cost of borrowing increases, potentially slowing down investment activities in the commercial real estate market. Currently, we're in a period where interest rates are subject to fluctuations due to efforts to control inflation while supporting economic recovery. This has created a climate of uncertainty in the CRE financing world, with investors closely watching the Fed's moves to gauge the best times to lock in rates. The impact of inflation. Inflation, the rate at which the general level of prices for goods and services is rising, also plays a crucial role in the CRE loan market. Inflation can erode purchasing power, but for real estate, it's a double-edged sword. On one hand, property values and rental income can increase with inflation, potentially making real estate investments more valuable over time. On the other hand, higher inflation can lead to higher interest rates, increasing the cost of borrowing. For CRE investors, understanding the relationship between inflation and interest rates is key to making informed decisions about when to borrow and at what terms. Post-pandemic effects on commercial real estate. The COVID-19 pandemic has had a profound impact on the commercial real estate market, altering how and where people work, shop, and live. Some sectors, like office and retail, have faced challenges as remote work and e-commerce have grown. Meanwhile, industrial and multifamily sectors have seen increased demand. These shifts have influenced lenders' perceptions of risk and, consequently, the availability and terms of CRE loans. Lenders are now more cautious, often requiring more stringent underwriting standards for properties in sectors that have been negatively impacted by the pandemic. Technological innovations. Technology is also reshaping the CRE financing landscape. Digital platforms and fintech companies are providing new ways for investors to access funding, from crowdfunding to blockchain based transactions. These innovations offer the potential for more streamlined processes and broader access to financing options, challenging traditional lending models and opening up new opportunities for both lenders and borrowers. Navigating the trends. For those looking to secure CRE financing, staying informed about these trends is crucial. They not only affect the availability and cost of loans, but also influence strategic decisions about which projects to pursue and when. By understanding the economic and market dynamics at play, investors can better position themselves to take advantage of favorable conditions and mitigate risk associated with less favorable ones. In this segment, we've covered the current market trends that are influencing CRE loans, highlighting the importance of economic factors, the impact of the pandemic, and the role of technological innovations. These insights provide a backdrop for strategic decision making and securing financing for commercial real estate projects. Next, we'll dive into the advantages and challenges of different CRE loan types, giving you the tools to access which financing option best suits your project's needs. Advantages and challenges of different loan types. In the diverse world of commercial real estate financing, each loan type offers unique advantages and poses distinct challenges. Making an informed choice requires a deep dive into the characteristics of these loans. Let's explore the nuances of various CRE loan types, highlighting their potential benefits and drawbacks for your real estate projects. Traditional bank loans, the staple of CRE financing. Advantages: competitive interest rates. Traditional bank loans often come with the most competitive interest rates, making them an attractive option for long term financing. Familiarity and reliability. Banks offer a sense of familiarity and reliability, with established relationships potentially leading to more favorable terms. Range of options. Banks provide a wide range of loan products, catering to different aspects of commercial real estate projects. Challenges: stringent qualification criteria. Qualifying for a bank loan can be challenging, requiring strong credit scores, substantial down payments, and often personal guarantees. Longer processing times. The approval and funding process can be lengthy, which might not be suitable for time sensitive projects. Less flexibility. Banks typically have strict policies and less flexibility in negotiating loan terms compared to other lenders. CMBS loans, secured commercial mortgages. Advantages: non recourse financing. CMBS loans are generally non recourse, meaning the borrower is not personally liable beyond the collateral of the property itself. Fixed interest rates. These loans usually offer fixed interest rates for the term, providing predictability in financial planning. Access to capital. CMBS loans can provide access to capital markets, offering substantial funding for large projects. Challenges: complexity and cost. The securitization process can be complex and costly, with additional fees and strict structuring requirements. Prepayment penalties. CMBS loans often come with significant prepayment penalties, limiting flexibility to refinance or sell the property. Impersonal servicing. Loan servicing is handled by a third party, which can make dealing with issues or negotiating terms more challenging. SBA loans, government supported financing. Advantages: lower down payment requirements. SBA loans often require lower down payments, making these accessible for smaller investors or those with limited capital. Favorable terms. These loans come with government backing, which can lead to more favorable interest rates and terms. Support for small businesses. Specifically designed to support small businesses, including provisions for startups and businesses looking to expand. Challenges: cap on loan amounts. SBA loans have maximum limits, which might not be sufficient for larger commercial real estate projects. Eligibility requirements. Strict eligibility criteria can limit access for certain businesses or projects. Personal guarantee required. Borrowers often must provide a personal guarantee, linking personal assets to the loan security. Private loans. Flexible and fast financing. Advantages. Speed. Private lenders can often provide quick approvals and funding, crucial for time sensitive projects. Flexibility. Terms can be more flexible, with the ability to tailor loans to specific project needs or borrower situations. Less stringent criteria. Easier qualification than traditional bank loans, beneficial for projects or borrowers not meeting conventional lending standards. Challenges. Higher interest rates. The convenience and flexibility come at a cost, with higher interest rates compared to traditional financing. Shorter terms. Loans often have shorter terms, requiring quicker repayment or refinancing. Varied lender quality. The range in lender reputability necessitates thorough due diligence to avoid predatory terms or unreliable partners. Bridge loans. Short-term gap financing. Advantages. Immediate access to capital. Bridge loans provide quick financing to bridge the gap between immediate needs and securing long-term financing. Flexibility in use. Can be used for a variety of purposes, including acquisitions, renovations, or stabilizing occupancy before refinancing. Interest-only payments. Often structured with interest-only payments, minimizing initial outlays and improving cash flow during the loan term. Challenges. Higher cost, accompanied by higher interest rates and fees compared to long-term financing options. Short duration, typically need to be repaid within a year or two, requiring borrowers to have a clear exit strategy. Risk of refinancing, depending on securing longer-term financing or selling the property, which can be risky if market conditions change. Each CRE loan type offers a unique blend of advantages and challenges, catering to different aspects of commercial real estate investment and development. Understanding these can help you strategically choose the best financing option for your project, balancing the need for capital with the cost of borrowing and the flexibility required to navigate the complexities of the real estate market. In our next segment, we will delve into strategic approaches to securing CRE financing, offering insights into preparing for loan applications, making your project appealing to lenders, and negotiating favorable terms. Strategic approaches to securing CRE financing. Navigating the complexities of commercial real estate financing requires more than just an understanding of the various loan types available. It demands a strategic approach to preparation, application, and negotiation to secure the best possible terms for your project. In this segment, we explore essential strategies that can enhance your chances of securing CRE financing, making your real estate venture not just a possibility, but a success. Preparing to apply for CRE loans. Build a strong financial foundation. Before approaching lenders, ensure your financials are in order. This includes having a solid credit score, a healthy balance sheet, and clear evidence of cash flow or potential cash flow from the property. Lenders will scrutinize your financial health to assess risk, so presenting a strong financial picture is crucial. Develop a comprehensive business plan. A well thought out business plan that outlines the project, expected revenues, market analysis, and exit strategy is indispensable. It should convincingly demonstrate how the loan will be utilized and how the investment will generate returns. This plan is your opportunity to sell your vision to the lenders. Understand your property inside and out. Lenders will want to know everything about the property, its condition, potential for income, any liabilities, and how it fits into the local market. Be prepared with appraisals, environmental studies, and any other relevant documentation or data. Making your project appealing to lenders. Highlight the strengths and opportunities. Every property has unique features or potential that can make it a lucrative investment, whether it's location, underutilized space with redevelopment potential, or a strong tenant lineup. Make sure to highlight these strengths in your pitch to lenders. Mitigate risk. Identifying potential risk and having clear strategies to mitigate them can make your project more appealing to lenders. This can involve having pre-leases in place, obtaining insurance, or demonstrating strong demand in the market. Leverage relationships. The real estate industry is built on relationships. If you have existing relationships with lenders or can be introduced by a trusted partner, use these connections. A recommendation can significantly enhance credibility and trust. Negotiating better loan terms. Shop around. Don't settle for the first offer. By approaching multiple lenders, you can compare terms and use competitive offers as leverage to negotiate better rates and more favorable conditions. Understand all the terms, not just the interest rate. While the interest rate is a critical factor, other terms, including fees, loan covenants, prepayment penalties, and flexibility in repayment, can also impact the overall cost and suitability of the loan. Be prepared to negotiate. Everything in a loan offer can potentially be negotiated. This includes the loan amount, interest rates, repayment schedule, and covenants. Knowing what is most important to you and where you can be flexible allows for effective negotiation. Seek professional advice. Consider hiring a commercial mortgage broker or financial advisor who understands the intricacies of CRE loans. Their expertise can help you navigate the application process, select the best loan product, and negotiate the most favorable terms. Securing the right CRE financing is a critical step in the success of any real estate venture. By preparing thoroughly, making your project appealing to lenders, and being strategic in negotiations, you can increase your chances of securing financing that meets your project's needs and your long-term objectives. In the next segment, we'll introduce examples of lenders that specialize in CRE financing, providing insights into their services and how they might fit into your financing strategy. Examples of CRE lenders. When it comes to securing commercial real estate financing, the choice of lender can be as crucial as the loan terms themselves. Different lenders cater to various niches within the CRE market, offering specialized loan products designed to meet the unique needs of investors and developers. In this segment, we spotlight three notable lenders in the CRE space: Go Capital, New Silver, and Visio Lending. Each brings a distinct approach to CRE financing, providing a range of options for borrowers. Go Capital. Overview. Go Capital is a comprehensive financial services provider that offers a variety of real estate financing solutions, including loans for commercial properties, investment residential properties, and hard money loans for real estate projects. Known for its fast application process and flexible qualification criteria, Go Capital caters to a wide range of borrowers, from seasoned investors to those new to the real estate market. Services and loan options. Commercial real estate loans, designed for purchasing or refinancing commercial properties, including office buildings, retail spaces, and warehouses. Hard money loans, short-term financing options for real estate investors looking to renovate or flip properties or finance new construction projects. Bridge loans. Go Capital provides bridge loans to cover gaps in financing, offering quick access to capital with flexible repayment terms. Advantages. The key advantage of Go Capital is its emphasis on speed and flexibility, making it an excellent choice for borrowers who need quick funding or who may not qualify for traditional bank loans due to strict requirements. New Silver. Overview. New Silver is a fintech company specializing in loans for real estate investors focused on the fix and flip market. Utilizing technology to streamline the loan application and decision process, New Silver offers rapid funding solutions, allowing investors to move quickly in competitive markets. Services and loan options. Fix and flip loans, tailored for investors looking to purchase, renovate, and sell residential properties. These loans are designed for short-term projects. Rental loans. For investors aiming to grow their portfolios of rental properties, New Silver provides long-term financing options. Refinancing. New Silver also offers refinancing options for existing investment properties, providing liquidity or better terms to investors. Advantages. New Silver's technology-driven approach results in fast approvals and funding, with a focus on the needs of residential real estate investors. Their products are particularly suited for those in the fix and flip sector, offering competitive rates and terms tailored to project timelines. Visio Lending. Overview. Visio Lending is a lender in rental property financing, offering loan products specifically designed for investors in residential rental properties. With a focus on long-term growth and cash flow, Visio Lending provides options for purchasing or refinancing single-family homes, condos, and multi-unit buildings. Service and loan options. Rental loans. Specialized loan products for acquiring or refinancing rental properties with a variety of term options to match investors' strategies. Portfolio loans. These are for investors with multiple properties. Visio offers portfolio loans that can consolidate financing into a single loan, simplifying management and potentially improving terms. Advantages. Visio Lending stands out for its commitment to supporting rental property investors, offering competitive rates and a straightforward application process. Their products are designed to help investors maximize cash flow and achieve long-term financial goals. Each of these lenders offers a unique set of advantages, tailored to different types of real estate projects and investor needs. Whether you're looking for quick funding for a quick fix and flip, flexible financing for commercial property, or stable long-term loans for rental properties, researching and selecting the right lender is a critical step in your real estate investment journey. In our next segment, we'll explore case studies and success stories from the world of CRE financing, providing real-world examples of how investors and developers have successfully navigated the loan process to achieve their project goals. Case studies and success stories. The path to successful commercial real estate financing is paved with strategic planning, market savvy, and sometimes a bit of creativity. In this segment, we delve into real-world case studies and success stories that highlight effective strategies for securing CRE loans. These examples are not only illustrate the practical application of the financing principles we've discussed, but also offer inspiration and valuable lessons for your own real estate ventures. Case Study 1. Revitalizing a downtown retail space. The project. An investor identified a prime opportunity in a distressed, yet historically significant downtown retail space. The building was in a desirable location, but needed substantial renovations to attract premium tenants. The challenge. Traditional lenders were hesitant due to the building's condition and the perceived risk of downtown retail investments, especially in a post-pandemic landscape. The solution. The investor turned to Go Capital, drawn by their flexibility and willingness to finance challenging projects. By presenting a detailed business plan that highlighted the building's potential, backed by market research showing a resurgence in downtown shopping, the investor secured a bridge loan to finance the purchase and renovations. The outcome. The renovations modernized the space while preserving the historical character, attracting high-end retailers and revitalizing the area. The project's success allowed the investor to refinance with a traditional bank loan at a lower interest rate, leveraging the increased property value. Case Study 2. A quick flip in a competitive market. The project. A seasoned fix and flip investor discovered a residential property in a sought-after neighborhood. The property required quick action due to the competitive market and needed significant renovations to reach its full market potential. The challenge. The tight timeline for both purchasing and renovating the property made traditional financing impractical. The solution. The investor applied for a fix and flip loan through New Silver, taking advantage of the rapid approval process and expertise in the fix and flip sector. New Silver's efficient underwriting process and understanding of the investor's business model enabled quick funding. The outcome. With timely financing in place, the investor completed the renovations within months, selling the property at a significant profit. The success of this project underscored the value of specialized lenders in a fast-paced real estate strategies. Case Study 3. Expanding a rental property portfolio. The project. An investor aiming to expand their portfolio of rental properties found a multi-unit residential building that offered strong cash flow potential. However, the investor needed financing that would allow for the acquisition without disrupting the cash flow from their existing properties. The challenge: traditional lender loan terms did not align with the investor's long-term cash flow optimization strategy. The solution: Visio Lending's rental loan products offered the perfect solution, with terms that supported long-term investment and cash flow goals. The application process was straightforward, focusing on the income-generating potential of the property rather than the investor's personal financial situation. The outcome: the loan from Visio Lending enabled the acquisition, and the property quickly contributed positive cash flow to the investor's portfolio. The success of this investment demonstrated the importance of choosing a lender that aligns with your investment strategy and goals. These case studies exemplify the diversity of strategies and solutions available in CRE financing. Whether navigating the complexities of revitalizing a historic property, executing a quick turnaround on a fix and flip, or strategically expanding a rental portfolio, the right financing approach can make all the difference. By understanding your project's unique needs and leveraging the strengths of specialized lenders, you can achieve remarkable success in the commercial real estate market. Next, we will explore the future of CRE financing, examining trends and innovations that could shape investment strategies and opportunities in the years to come. The future of CRE financing. As we peer into the horizon of commercial real estate financing, it's evident that the sector is on the cusp of significant transformations. Driven by technological advancements, changing market dynamics, and evolving investor expectations, the future of CRE financing is poised to offer new opportunities and challenges. In this concluding segment, we explore emerging trends and innovations that are shaping the future of real estate investment and how you can position yourself to capitalize on these developments. Technological innovations and digital platforms. The rise of fintech and proptech is revolutionizing the way investors access financing, making the process faster, more efficient, and often less costly. Digital platforms are streamlining applications, underwriting, and funding processes, reducing the time it takes to secure financing from weeks or months to just days or even hours. Moreover, blockchain technology is beginning to make its mark on real estate transactions, offering increased transparency, security, and efficiency in property sales and financing. These technological advancements are democratizing access to CRE financing, opening doors for a broader range of investors. Crowdfunding and peer-to-peer lending. Crowdfunding and peer-to-peer lending platforms are breaking down traditional barriers to real estate investment, allowing individual investors to participate in projects that were once the exclusive domain of large institutions or high net worth individuals. These platforms enable investors to pool resources, spreading risk, and offering the chance to invest in larger, potentially more lucrative projects. As these platforms continue to gain traction, they could significantly impact the availability and structure of CRE financing. Sustainability and green financing. The global push towards sustainability is influencing CRE financing, with an increasing number of lenders offering green loans or incentives for projects that meet specific environmental standards. These might include energy efficient buildings, sustainable construction materials, or developments that contribute positively to their local environment. Investors who focus on sustainable projects not only benefit from potential financing advantages, but also position themselves to meet the growing demand for green real estate among tenants and buyers. The evolving landscape of work and retail. The future of office and retail spaces, significantly impacted by the COVID-19 pandemic, will continue to influence CRE financing. The shift towards remote work and the rise of e-commerce are prompting investors and developers to rethink traditional spaces, transforming offices into flexible workspaces and repurposing retail locations for mixed-use developments. Lenders are closely watching these trends, and their willingness to finance such projects will depend on how well investors can adapt to and capitalize on these changes. Navigating the future. To thrive in the future of CRE financing, investors and developers must stay abreast of these trends, embracing innovation and flexibility. Building a strong online presence, leveraging new financing platforms, focusing on sustainability, and adapting to the changing uses of commercial spaces will be key strategies for success. Moreover, cultivating a network of diverse funding sources from traditional lenders to fintech platforms and crowdfunding will ensure access to the capital needed to seize emerging opportunities. As we conclude this episode of AltFinance, the funding frontier, it's clear that the world of CRE financing is evolving rapidly, offering new avenues for investment and development. By staying informed, embracing new technologies, and adapting to the market shifts, you can navigate the complexities of CRE financing and position your projects for success in the dynamic landscape of commercial real estate. As we draw this episode to a close, I want to take a moment to reflect on the journey we've embarked upon today. Real Estate Ventures Navigating CRE Loan Strategies has taken us deep into the heart of commercial real estate financing, exploring the myriad of loan options, strategic approaches, and innovative trends shaping the future of investment and development in this vibrant sector. From understanding the foundational aspects of CRE loans to examining the cutting-edge innovations in financing, we've covered a broad spectrum of knowledge essential for any investor or developer looking to make their mark in the commercial real estate world. The case studies and success stories shared have provided tangible examples of how strategic financing decisions can lead to remarkable project successes, highlighting the importance of preparation, flexibility, and innovation in securing CRE financing. The future of CRE financing is bright, with technological advancements and evolving market dynamics offering new opportunities for growth and investment. As we look ahead, staying informed, adaptable, and forward-thinking will be key to navigating the complexities of this ever-changing landscape. I hope this episode has provided you with valuable insights and inspired you to explore the vast possibilities within CRE financing. Whether you're a seasoned investor or just starting your journey in commercial real estate, remember that the right strategy, knowledge, and partners can turn your real estate ambitions into reality. Thank you for tuning in to AltFinance, the funding frontier. I'm Jason Feimster, your guide to the fascinating world of alternative financing. Join us next time as we continue to uncover the strategies, insights, and innovations that empower you to achieve your financial goals. Until then, keep pushing the boundaries, exploring new opportunities, and shaping the future of finance in your real estate ventures. It's been a pleasure guiding you through the intricacies of CRE loan strategies, and I look forward to exploring more topics with you in the future episodes of AltFinance, the funding frontier.